Hello, everyone, and welcome back to Motley Fool Conversations. I'm Motley Fool contributing stock market analyst Rachel Warren, and I am delighted to be joined on the show today by Professor Fiona Murray and Dr. Phil Budden. Fiona is the Associate Dean for Innovation and Professor of Entrepreneurship at the MIT Sloan School of Management. She has served as advisor to the UK Prime Minister on science and technology policy for over a decade and as vice chair of the NATO Innovation Fund. Phil serves as senior lecturer at the MIT Sloan School of Management, focusing on innovation ecosystems and corporate innovation. He's also a former British diplomat who served for 2 decades, from 1993 to 2013. Both Fiona and Phil have collaborated on various MIT programs, including the Regional Entrepreneurship Acceleration Program, or REAP, and they are also faculty directors of the MIT United Kingdom program, as well as co-authors of the book Accelerating Innovation, Competitive Advantage Through Ecosystem Engagement. Professor Murray, Dr. Budden, so thrilled to have you on the show today. Welcome.
Thank you.
Thank you very much.
Appreciate it. It's really great to be here.
So here at the Motley Fool, we serve an audience and member base of primarily individual retail investors. And innovation ecosystems can really generate a wealth of new opportunities for retail investors, including emerging and growing companies. And this is particularly relevant in high growth sectors like AI and biotech, all of which can present a really strong value proposition for retail investors. So to start off today, I really want to dive into what innovation ecosystems are, how they develop, why they matter. What are those main components, and what does innovation look like in practice?
Thank you, Rachel, and it's wonderful to be here, and hello to Motley Fool investors out there. I counted myself as one after the Gardeners founded this in the 1990s, so it's great to be here. Innovation is a very important phenomenon. It is creating future industries, it's harnessing technologies, it's happening all around the world, but it's also happening in very specific locations around the world, which we call innovation ecosystems. And so I think it's great to be bringing this MIT approach to innovation and ecosystems to the retail investor community, because we think a lot of the companies of the future, the growth stories, are going to be coming out of those innovation ecosystems. With that, let me turn it over to the professor who has pioneered so much of this work on innovation and indeed ecosystems.
Thank you. And again, Rachel, really delighted to be here with you and all the Motley Fool membership. As Phil says, innovation is very much sort of, I think, at the core of economic growth. And we think of it as a process of taking ideas from inception all the way through to impact at scale. And one of the things that we find really important is that in those early embryonic stages, when you've got a really new idea, particularly one that is grounded in science and technology, that having access to the right resources and to the right people and the right organizations to support that embryonic growth is particularly important. And that's where innovation ecosystems come in. They're places in the world that seem to be very rich in the special resources that are particularly important for early stage venture creation and growth. And that means specialized talent. It means particular kinds of access to quite specialized and capital. It sometimes means quite unique sorts of infrastructure. It can mean co-working spaces, but it can also mean access to something like an atomic force microscope or some other bit of expensive scientific kit. And lastly, it can sometimes mean access to really demanding customers who are willing to try out new things. So ecosystems are places that have all those resources nearby. They're also places that have some key stakeholders. They obviously have entrepreneurs, but they also have these risk capital providers. They tend to have universities. The government can play an important role, but particularly large corporations can be a very important part of these ecosystems. So these special places tend to have both the resources and the stakeholders.
And as a follow-up to that, and I'll address this to you first, Professor Murray, and then Dr. Budden, if you have anything additional to add. What is really the importance of internal versus external innovation? Is there a spectrum there? And then how have these ecosystems shifted over the last decade, particularly in the age of AI and all these other tech innovations?
Mm-hmm. So I think traditionally we've thought about much innovation happening internally, right? It's happened in sort of fields and greenfield sites or in ivory towers, either at universities or particularly in sort of storied R&D labs. Think about places like Bell Labs or and so on. And if you wanted to do a large, really audacious innovation project, you often said to yourself, we must take all these people away and sort of put them in a field, the Manhattan Project, sort of NASA, space launch, and so on. What we've seen today is an increasing shift to saying those early stages are perhaps more efficiently done when we have a number of entrepreneurs, so sort of outside the confines of large organizations. Instead, in these open innovation ecosystems where entrepreneurs are working with one another, gathering up the risk capital from the external venture capital providers and others, working closely with universities, and potentially working in partnership with large corporations. But there's something about the incentives that you're able to provide for entrepreneurs that means this more open but ecosystem-based approach seems to be the way in which the really big, audacious innovation projects are taking place in today's economy.
I think that's exactly right. And from an investor perspective, coming out of these innovation ecosystems are going to be the enterprises of the future, not all of which are going to succeed, but once they come through various stages of sort of early venture capital, we will see them emerge. And so, one might have expected electric vehicles to have come out of Detroit, Motown, and yet it came out of Silicon Valley with Tesla. And so the investor needs to look at the innovation ecosystems out there and not just the traditional industrial clusters. But as one invests in large publicly traded companies, one probably wants to determine, are those companies doing good internal innovation? And are they tapping into ecosystems to get innovation, or are they perhaps going to fall back alongside their peers? So there's a variety of ways of harnessing this great set of insights from Fiona on innovation and the ecosystems where it happens from an investor perspective.
The access to the flow of information and new ideas, it obviously creates more opportunities for investors to connect with promising businesses and portfolios at the right time. And of course, companies in regions with strong innovation ecosystems seem to be better positioned for long-term economic growth, which can also make them more attractive to investors looking for sustainable returns. And the other thing is, by sharing risk and accelerating development, these ecosystems can help create more robust businesses that are more resilient to market changes. I think one of the things I'm curious about, and I'll address this to you, Professor Murray, first, how can innovation ecosystems create sustainable competitive advantages for companies and regions, and how does that translate to durable investment opportunities?
So one of the things that we know is really important about innovation ecosystems is because they are places where ideas can flourish, companies can be quite rapidly created, resources can be pulled together. They are places that tend to then attract additional talent. If I'm a really clever, talented human, I could go to some sort of faraway place and join a particular company there. But if that company fails, then my next alternative might mean that I have to move, and my whole family may have to move with me, and I might not wish to do that. On the other hand, if I say, look, I'm really interested in joining a company, it's a startup, it has a lot of risk, but it's in an innovation ecosystem, then if that company happens to fail, then I can join a company that's proximate, right? It's just down the road. It may be in the same co-working space. And so what we see is this very rapid sort of recycling of resources, of talent, increasing specialization of capital. And it's really that allows innovation ecosystems to create quite durable competitive advantage for particular places in the world, as long as those places are on that continuous journey of sort of refreshing their talent, refreshing the underlying sort of insight, research, knowledge base, and so on. And so that's really, I think, at the regional level. And again, when it comes to individual companies, if I'm a large corporation, then if I'm proximate to an ecosystem, I've probably got opportunities to hire talent. I have opportunities to talk to sophisticated investors. And I also have tremendous opportunities for partnership, both with the universities themselves, but also with startups. I might choose to engage through a corporate venturing kind of mechanism. I might build a venture studio. But all of those things are things that we know that large corporations use to try to tap into the vibrant ideas that are being generated in ecosystems. And that's the reason why we've seen a large number of pharmaceutical companies move to the Boston area so they can tap into the life science ecosystem here. We've seen oil and gas companies move in Houston, try to both build an ecosystem and tap into the ecosystem there. And there are countless examples of large corporations really reshaping their locational strategy to be proximate to these exciting innovation ecosystems.
And it's this sort of analysis and set of insights that we've brought out in our recent book on accelerating innovation. So if one is looking at investable opportunities, one might want to consider the companies that you're looking at. How well are they doing at leaning into this innovation opportunity? And as Fiona said, there are going to be great benefits to corporates with their innovation to the extent that they tap into innovation ecosystems that are relevant to them. So we have the world's pharmaceutical companies coming here to Boston, not because of the weather, because it's often quite rainy here, but because this is where the future of biotech is being created. And so it's a form of analysis when you're assessing a company to see if it's investable. Is it leaning into the innovation opportunities? Does it have a strategy through R&D and corporate venture capital that means that it's being serious about its ecosystem engagement strategy?
University partnerships, university industry partnerships have long been seen as mutually beneficial arrangements that are really key to support the pace of innovation. And of course, for companies, they can access cutting edge research and IP, intellectual property from universities. That reduces the time and cost associated with internal research and development efforts. And these partnerships frequently lead to the creation of spin-off companies or other vehicles that can provide opportunities for commercializing new knowledge and technology. But I'd love to hear both of your perspectives, and we'll start with Dr. Budden first. Can you share your perspective on the role of university industry partnerships in driving breakthrough innovations and technologies? And how is that defined? How can one measure the success of that innovation?
That's a great question. And in our 5 stakeholder model for these innovation ecosystems, we see universities and corporates as 2 of the key players. As we know from our work with large corporations and with universities, these are both large, complex institutions. And so there's a variety of ways they can connect. One of the traditional ways is for a corporate to sponsor research at a university. One of the tactics we often recommend to people, because it's likely to lead to swifter success, is, as you say, for the large corporates to engage the spin-out companies that are coming out of the universities. Because unlike the fundamental research, which may be 10 years of research, 2 PhDs worth, the spin-out companies are often students trying to do something commercial with their research and technology. And so to the extent that large companies are worried about quarterly earnings and share prices, they probably want to go to the faster route at seeing what university spin-outs are coming. And they probably want to think through which universities are good at such spin-outs. But that's a small tactical aspect of a much bigger issue on which I'd like to hand it over to the professor.
Yeah, so the way that I might think about it is traditionally, I think corporations would have sent somebody from their R&D organization over to the university and said, all right, sort of be embedded in campus, see what's going on, maybe identify some talented individuals. And those relationships, I think, were quite productive, particularly when the pace of R&D was somewhat steady, if you like. And the labor market was such that young, talented individuals often really thought of their careers as being in joining these large corporations and staying for very long periods of time. I think today we're seeing a few different dynamics. One is I do think the pace of change has increased. And secondly, the young, talented individuals often want to do other things. They're particularly entrepreneurial. And we see that in the number of our students that have long-term entrepreneurial aspirations. And so that means that corporations have to build different sorts of university relationships. We're often seeing them come forward with the big challenges or the big problem sets that are on their mind. And a university like MIT loves that because, we often think, tell us what's on your mind. What's your problem? We'll help you solve it. And that's a much more productive, I think, sort of relationship to really bring to the table. And that allows for the sort of co-creation of ideas, working together, getting that flow of talent. And whether or not you hire those individuals or they just know you and they know who you are, even if they're going to a startup, them, you're part of the social fabric of the university and the ecosystem. And we also see companies trying to tap into some of the very specialized infrastructure that we have on campus. Our colleague Glad Bilovich has something called MIT Nano, where we have some of the most sophisticated equipment that's available for nanotechnology, for semiconductor experimentation and development. And that as a very fertile ground for large companies to work collectively with faculty and students. And we see all sorts of industries trying to tap in this way. MIT and we have been doing some work with the mining industry as they come forward, both with some of the challenges around sustainability. They're asking questions around how they can use AI more effectively. And they're worrying really about the economics and the sort of financial implications and the opportunities of some of the recent focus on, say, critical minerals. On the other hand, our friends in the Pentagon also come, Special Operations Command, to say, can we get the best brains on some of the most important problems, whether it's drones in Ukraine or something else. So these are really different kinds of relationships than the ones that I at least encountered when I first joined MIT in 2000. It's beginning to feel very different, all about the big problems and big challenges.
Yeah, it's fascinating to hear about. And it also makes me wonder, and maybe you both can talk about this a bit more, what are the different types of university industry partnership models, and what does success really look like for each partner, within that dynamic relationship?
Phil, I wonder whether or not, you've thought, and we often when we're teaching go through this exercise of what actually causes it not to work. So perhaps you could talk about some of the sort of diplomatic challenges, and then maybe Please. I can sort of pick up on the taxonomy.
Definitely. As I mentioned earlier, there are human beings involved with this, and different organizations have different cultures. So through our REAP program, which is multi-stakeholder, we try to have the different stakeholders understand each other better. So those in the university to understand what drives their corporate friends, corporates to understand what does winning look like for an academic. And it is possible, and this is what separates out the world's best innovation ecosystems, that the corporates and the universities end up understanding each other better. One of the challenges, particularly for a publicly listed company, is they may be under daily pressure with their stock price, they may have quarterly earnings, and so they'll feel they have a certain rhythm. Whereas in the universities, they may be thinking about stuff they want to get done over the academic year, maybe something to have a PhD student work on for 5 years. And so there's often a disconnect between the two. One of the groups that often brings the two together are the entrepreneurs who really are trying to move quickly and create new companies. And so one of the biggest challenges, whatever the particular form of the relationship, and one of the reasons perhaps we've seen a shift from doing just pure research, which takes a decade, through to the corporates finding a way to work with the university spinouts that are good to go, is you need to respect each other's different approaches and then find a way to align those interests. So that's for my very pragmatic diplomatic advice. Now let me turn to the learned professor for, I believe she said, the taxonomy.
Yeah, so look, in the book, what we've talked about is, as you think about an innovation project, we try to think through how new is the solution? Is it a very, very new solution space that you're exploring, or a solution that you kind of understand reasonably well? And is the problem that you're trying to solve a problem that you understand really well, or is it something that's very, very new? And I think that sort of university relationships tend to fall across, different parts of that sort of landscape, really. So there are definitely situations when a company might come to campus and say, look, we know that you have, developed a particular solution to something. We want you to apply this to this new problem. We found a new problem, but we think that new kinds of material, that material that you've been working on for years, that material science, could you just apply this to this particular new problem of ours? And that can be quite narrow and well-defined. That's often a sort of traditional form of contract research. It's a project that has a well-defined endpoint. On the other hand, you might say, actually, look, we have an existing problem. This has been a huge headache for an incredibly long time. And we want you to absolutely sort of push the frontiers of knowledge. We're not quite sure what the solution is going to look like. And companies might come to a university, particularly like MIT, pose that very well understood problem, and then actually ask for research proposals, and they might fund a portfolio of activities and sort of almost set up a little mini competition inside the university, or sometimes even across universities, who see who can really develop those sorts of things. And then the really interesting, I think, one that it tends to get universities really intrigued is when people come and say, look, we have a sort of a vision of the future, sort of a new problem space or a new set of challenges, and we're not quite sure how to even architect a well-defined set of research programs. And so we'd love to work with you and your leading students on really sort of building this imaginary future together. We won't necessarily absorb every solution back into our organization, that we'd be really supportive of you creating a set of ventures based on some of those solutions. Those tend to be quite long-term in nature. They really are often all about the talent as much as they are about the specific research outcomes. And so those require typically more resources, quite a lot more patience, and a real willingness to be sort of to co-create and be embedded on university campus for a reasonably long period of time. So those are the three types of things that I think we see.
It's really fascinating. And Professor Murray, maybe a follow-up question to that as well, and then Dr. Budden, if you have anything to add. Are there particular industries in which you have found there is sort of the most potential for these innovation ecosystems to evolve and flourish? Or is it certainly something you're seeing all across the board, or is it very, very specific to certain industries?
So I would say that so Silicon Valley, right, we think of as perhaps one of the first great innovation ecosystems. And that was really an ecosystem that was built up first around sort of radio technology in the early 1900s, but subsequently really all about computers, chips, and software and so on. And it tended to be an ecosystem that was all about entrepreneurship and about companies being created and growing. Boston, on the other hand, was an ecosystem that also grew up around computing, lost its way a little bit as that shifted to California, and then kind of reinvented itself around life sciences. And that's really been one of the first areas where the big pharmaceutical companies actually moved here from New Jersey or Switzerland or elsewhere in the world and said, look, we really want to tap in. And I think people thought at the beginning that there was something just very unique and special about life sciences. I think what it was is that it was a willingness and an ability of large companies to start to evaluate ideas at a very early stage and to build and design very new kinds of partnerships. And we've subsequently seen that partnership playbook, if you like, emerge in other industries. Definitely in oil and gas, and I would say particularly when the oil and gas companies were thinking very, very hard about new kinds of alternative energy technologies, or carbon capture and so on, recognizing that this was really distant from their own internal R&D. And so we started to see that happening in the oil and gas industry. And increasingly, I'd say we see it in some very unusual things like defense and also like mining. I mean, large companies that are facing transformative new technologies that don't really live in their own R&D labs, absolutely recognizing that there's huge value in building these ecosystem relationships. So I don't think it's industry specific, but I do think that the pharmaceutical industry sort of led the way and kind of created that playbook, particularly in its relationships, first with somewhere like Boston, subsequently in places like Oxford and elsewhere in the world, like Zurich and elsewhere.
No, I think that's spot on. And the amazing thing with this sort of clustering of innovation in these so-called ecosystems is it does seem to apply across the sectors. So whatever the Motley Fool investors are interested in, they're probably going to find this clustering effect. And it's even true for the most digital of technologies. For example, generative AI, which is creating a lot of buzz. The breakthrough generative AI ideas have come out of a handful of places. They're not evenly distributed across the planet. And so for investors, the benefit of the innovation ecosystem model is there's a couple of places in the world they need to be watching to see who's creating the new technology. And now we have Gen AI. Once it's been created, once it's out of the innovation ecosystem, then all kinds of industrial clusters can harness it. And so it's going to be fascinating to see the big publicly traded companies, the differentiator for them and their investable stock prices is going to be how well are they harnessing AI, not generally, but specifically for their industry. And so there really is a lot to these models that Fiona set out that can give direction for retail investors.
And Dr. Budden as well, what are the benefits and risks of established ecosystems, with proven returns versus emerging ecosystems with high growth potential? I mean, this is something you both talked about a lot in your book. And we've talked a lot about some of these established ecosystems today, but obviously there's a lot of emerging areas that provide tremendous potential as well. So I'd love to hear your thoughts on that, and then Professor Murray's.
Sure. No, that's a great point. Well, the established ecosystems, are well established and it's worthwhile looking to see what's going on. But some of them, like Silicon Valley, are now become so expensive and so dominated by monopolists that a lot of the good ideas are going elsewhere. And so for somebody looking for a high risk, high reward, investable opportunity, they should be looking at a broader array of ecosystems rather than just the handful that are often talked about in the mainstream press. The other aspect is there's a lot of innovation happening in non-traditional, in emergent, in nascent ecosystems. And so your investors may actually find opportunities that are missing for others if they're looking in regions that they know about or they care about, a sector that's perhaps been overlooked. You know, Fiona mentioned mining. It's interesting to see the application of robotics and AI in the mining sector. And so picking the companies in a particular sector, which may not be fashionable for sort of mainstream investors, you know, they may say it's foolish to be looking at mining. Actually, you could probably get some hidden gems tucked away in that particular sector. So yes, look at the well-established ones, but also be alive to the places that are up and coming that perhaps the mainstream is overlooking.
Yeah, and let me maybe give you a few examples. So I think for a long time when we thought of California and innovation ecosystems, we only really thought about Silicon Valley. We might have then started to talk about San Diego, particularly around life sciences and biotech. But increasingly we're seeing LA as a really, I think, incredibly important place. There's an innovation ecosystem absolutely emerging more around hardware and manufacturing, the presence of SpaceX, that was drawing in talent first from the traditional aerospace and defense industry there, but then itself being quite successful and sort of spinning out individual, incredibly talented engineers. And we start to see 3D printing companies, advanced manufacturing companies. So that's a fascinating, I think, nascent innovation ecosystem where we might least expect it. Some related dynamics in Munich. I spent a little time recently in Munich and was really surprised to see quite how vibrant that innovation ecosystem has become. You've got a lot of tremendously entrepreneurial students being trained in that ecosystem, but they're also picking up partnerships and expertise from the traditional auto industry and some of that precision engineering. And so we start to see a lot of aerospace and defense, particularly as Europe starts to shift its posture towards defense and security. Munich is really sort of picking up. And then it's somewhere like Pittsburgh with deep expertise in autonomy, or even Zurich in Switzerland, which has a tremendously long tradition of very precise precision robotics. Again, you might not be that surprised that we'd see that in Switzerland. But in these emerging ecosystems, we're starting to see some very, very interesting things. And so we absolutely, I think it's brilliant to look beyond the usual suspects. And one of the things we try to do in the book is pick up on these more unusual sorts of examples of regions starting to absolutely sort of have these flourishing ecosystems around some of their sources of particular comparative expertise.
A follow-up question for you both, and for you first, Professor Murray. How can investors spot the kind of early signals of these thriving innovation clusters before they become obvious to the market?
I mean, obviously, one of the best things you can possibly do is to sort of wander about. I mean, these are ecosystems almost by their nature are quite open. And so if you have, you know, particularly a sort of a university on your doorstep, I mean, absolutely go and wander around, see what's going on. I mean, some of, I think, the advanced signals, if you like, the tells of what's happening in an ecosystem is starting to look at where talent is going. We can learn a huge amount around where young people are choosing to look for job opportunities. The shifting nature of who's recruiting on university campuses tell us a tremendous amount. They're very early warning signals, I think, of what's happening. You can obviously also look at the publication data. You know, people actually in academia, people are racing to publish and tell the world what they're doing. And so, you know, particularly today with our ability to sort of interrogate large amounts of public data, you can start to see some of the hints, if you're technically minded, of what universities are doing, things that faculty are patenting. And I also, I love reading the university newsletter. When I read MIT's in the mornings, I think, wow, did somebody really do that? I think actually looking at some of the universities and seeing what they're up to, what they're talking about, will start to give you a hint of where that frontier is going. Because, you know, as we know, and Phil is the person who really normally says this, is that the future is already here. It's just not evenly distributed. Is that the expression?
Quoting William Gibson, the cyberpunk writer, but that's exactly right.
Thank you.
No, the future is already here. It's just not evenly distributed. And there are hotspots on the planet. One of the challenges for retail investors is to decide what is the investable vehicle. And so Fiona's exactly right. You want to look at the cutting edge science. You want to see the directions that universities are going. You want to see which corporations are leaning into those partnerships, because that is going to give those particular players an edge, because it's hard to invest in the ecosystem. You're more likely to invest in a particular actor. And so thinking about whether the actors are leaning into this and getting competitive edge, competitive advantage, and particularly those who are leaning into these particular innovation hotspots.
And Dr. Budden, there's a question I wanted to pose to you specifically, and then of course if Professor Murray has any additional thoughts. But given your background, something I think that comes to mind as well is how do geopolitical factors like tariffs, sanctions, export controls, industrial policies, how do these elements play into and reshape the very critical considerations for how companies build their supply chains, how they select markets, and then manage these innovation ecosystems?
Rachel, that's a great question. And investors for 30, 35 years have been able to just sort of focus on a world is flat global market where they could pretty much invest wherever they liked, ever since from the start of Motley Fool. But in recent years, other dimensions have come in. And so the savvy investor needs to be looking beyond the mainstream wisdom and thinking about what are the big trends that are going on. Yes, there's geoeconomics. Silicon Valley was founded around the silicon of semiconductors. And for a long time, America cared where semiconductors were built, and then it didn't. So they've been built in Taiwan, and now it cares again. And so there's geoeconomics out there. And one of the things the investors need to think is when they're picking the vehicle that they want to invest in, is this a company that is navigating the fragmentation of the global economic order? You also asked about geopolitics, so that's something of interest to me as a diplomat, because it's turning out that it's not only the different economics, but also, given some of the geopolitical trends we see, it's no longer a flat investment board out there. One operating out of the United States or Europe, one might want to think carefully about where one invested, given the geopolitics that is coming about. To the extent that one factors in potential political crises, then one may not want to have investments on the wrong side of those crises, which could well become stranded assets. And so for the investor, they need to think carefully about some of the big directions that are going on in geoeconomics and geopolitics, and think about how can they position their individual investments and collectively as a portfolio so that they are wise to the ways of the world and where they want to be making those. But let me turn it over to Fiona Murray, who is now chair of NATO's Innovation Fund, so spends a lot of time thinking about geopolitics and also particularly the defense dimension.
Yeah, I mean, certainly we've seen as a result of the geopolitical tensions that have been increasing, it's hard to ignore the fact that investments in defense and security, everyone was to have invested in a number of those large defense primes a few years ago. They've been increasing absolutely dramatically. At the same time, we're also beginning to see some of the startups emerge in those areas, and I think some of them will go public quite soon. And if you believe that the commitments of many of the NATO nations to increase defense spending will really come through and they're actually able to get that money out the door as customers, then we absolutely are seeing different sectors of the economy be really shaped by a changing demand, I think, on the part of governments. But the other thing I'd say is to really think carefully about the exposure of any given company to particular markets and to particular supply chains. And so whether or not I'm investing in a company or I'm leading a company, the thing I say is we need a sort of geopolitical calculus as I'm trying to understand that sense of exposure. On the market side, definitely certain markets are sort of rising and falling according to some of our geopolitical needs. Another great example, I think, is what's happened with the nuclear industry. Has become much, much more important as both demand from data centers is going up, but also as people's willingness to have quite such oil dependency and from various nations is really changing. We're also seeing certain kinds of markets be closed off or less accessible. And so as we see those markets being shaped, we've really got to think about the exposure in the market sense of some of our companies. But on the other side is the supply chains. I got interested in this a few years ago when it was really clear that in Ukraine, for example, when the Ukrainians were trying to build their drones, that they couldn't get access to all the key components. And when you actually sort of put a drone on an operating table and do a kind of anatomy of a drone, what you find is that of about the 12 components, almost all of them are really only available in very large supply and at low cost from China. And you might say, is that inevitable? Is that where they were invented? And they actually weren't. They were largely invented in the US and in Europe. And that expertise has sort of shifted as China was willing to and invested in making these things at scale. That's no longer really as accessible as it used to be. And we're beginning to see companies think very, very carefully about their supply chain exposure. That's something to think about as you invest in certain companies. It's also a really interesting opportunity to start to think about investments further down these supply chains as companies are shifting towards, let's call it friendshoring. So looking not only within the US, but across allies on, both across the Pacific and also across the Atlantic. So quite a lot of intersecting dimensions to think about. I think are really front and center for many of the priority technology areas that the US and others really care very deeply about.
Yeah, thank you both for that. And as we wind down to the last few minutes of our discussion, I mean, we've talked a lot, of course, about university industry partnerships today, but I wonder if you could each share about MIT's approach to fostering entrepreneurship, how that translates to investment opportunities in emerging technologies.
I mean, maybe I can just start by saying that as we think about entrepreneurship on our campus, I like to think about it as sort of happening in two big, really equally important handfuls. One is what I would call dorm to market. So our wonderful, amazing students sort of lying in the dorm at night having ideas about problems to solve. We know that's how Facebook started, Dropbox, and MIT spinout. And so that's one thing. And so we really try to support our students in their entrepreneurial aspirations, give them the toolkits that they need, whether it's in entrepreneurial strategy or it's in sort of go-to-market, lean startup, and so on. On the other hand, we're also really trying to support lab to market. So support those spinouts that are coming out of the research labs. They're based on cutting edge science and technology. There's often intellectual property that goes with that. And we really want to sort of encourage those ideas to get out the door. Traditionally, we've sort of waited for the perfect moment between the PhD student, the professor, and the idea has to sort of all be perfectly aligned before that comes out. Recognizing that sort of serendipity is amazing when it happens, but perhaps leaves ideas sort of undeveloped or underdeveloped. We've also started to work on a new venture studio called Proto Ventures on campus, where we're bringing in venture builders to try and really help us systematize that sort of lab to market spin out. But those are the two big handfuls. But Phil, I mean, I'm curious, what are you seeing on campus? You do a lot of teaching around this too.
Well, I'm just so impressed with the students that come to MIT, how entrepreneurial they want to be. And this is true of our undergraduates all the way through our executive MBAs, who are mid-career, high-potential professionals, equally want to be entrepreneurial. And I think Motley Fool investors need to think about the power of this entrepreneurship. Where are places on the planet, universities like MIT and Stanford and others, that are producing people who are not just admiring the science, but are actually trying to commercialize it and turn it into enterprises? And I think Fiona's two big buckets there, I think, are very important. There are some that are going to be in the digital tech space, which are going to be maybe high risk, high reward, because we don't know which ones are going to work out, particularly with the current Gen A excitement. But also on the deep tech side, one of the things I love about the Motley Fool philosophy is about investing in quality for the longer term. Some of the things that are going to make a difference in 2030 could now be affordable. And Fiona sort of mentioned sectors. We're not going to pick stocks ourselves, but one should think about alternative energy beyond oil and gas, such as fusion energy or old nuclear. There's a variety of things out there. And I think looking at the kinds of things that are going on in the universities, both the world-class ones, but also ones that investors may have in their backyard, I think can give them competitive advantage to spot things, companies that they can invest in that go with their thesis. And the mainstream may be missing this. They may think it's, only a fool would invest in such a company. And yet maybe it's the Motley Fool who actually sees that there is an opportunity there that perhaps others are missing. So yes, I'm very excited about looking at university-based ecosystems.
Well, one final question for you both, and I'll address this to Dr. Budden first. What are a couple core principles or metrics that the investor community can leverage as we're looking at or looking for the next generation of transformative companies?
That's a good question. There's going to be a lot of amazing science and research being done out there. But for an investor that is looking for a return on their investment, they want to see that there is a route to market, whether the idea comes out of the dorm room or the lab. They want to see, is there theoretically a way that this is going to meet a business, economic, or societal need that people will pay for? And here's the hard work they need to do as stock pickers, is to pick which stock in that particular sector, or maybe an ETF for the sector, is going to be the go-ahead. And so they definitely need to look at the macro level. What are the big geoeconomics, geopolitics, technological breakthroughs? But then they need to get into the micro level analysis of like which particular stock in this sector is going to do well, or which particular industrial sector should they be backing through an ETF. So that would be my concluding advice.
Fantastic. Professor Murray, I'll give you the final word.
Sure. I mean, look, I would look at, I'm really enamored by thinking about the talent. And so I would be looking really, really carefully at the kinds of talent that these companies are attracting. I'd want to understand how fast they're hiring, where they're hiring, and the kinds of talent they're looking for. I think it really tells you something about, are they looking for people who are absolutely sort of consumer facing, deploying product to consumers, really taking that very seriously? Are they looking for people who are going to sort of bolster those underlying scientific and technological foundations, but really trying to solve a problem, not just sort of do science just because it's interesting? That's really important to humanity, but really for these companies. And so I'd be looking really carefully at sort of some of the things that you see in places like LinkedIn about who's hiring and for what purpose. I think those are actually kind of metrics right down there that gives you a little bit of a flavor about what companies are up to. And it really helps you understand how they're trying to create value. Each of these companies is given quite scarce capital, right? Capital is expensive, and investors are patient, they demand returns. And so really understanding how companies are allocating that capital, particularly through the lens of talent and product, I think is where we need to be looking.
Wonderful. Well, it's been an incredibly educational conversation today. I'm sure our listeners will feel the same. And viewers and listeners, check out Dr. Budden and Professor Murray's book, Accelerating Innovation, Competitive Advantage Through Ecosystem Engagement. The both of you, thank you so much for coming on today and speaking with me. It's been a pleasure.
Our pleasure too.
Thank you, Rachel. We appreciate it.